Welcome, everyone. It's good to see you all. I see people connecting. I see a lot of names and faces that I know quite well, which is always fun to see people returning. Give everybody a minute or two to join up. Hey there, Marlon. Good to see you. Nice artwork in the background. Patrick, I can't believe you actually did make it. That's awesome.
Nice.
Patrick's calling in from Hong Kong. So I know the time zone is a little strange there for him. But I see we have quite a few people, which is great, and I know we always have a few more join in. Just so everybody knows, this is being recorded, so we can put it on our YouTube channel, and everybody can go there and see the recordings, which is always nice. We have a lot of people replay recordings. I'm going to just pop up a little bit of information here for folks, and then we can kind of launch into things. But I am looking forward to this. This is going to be, I think, a really interesting time. So for everybody who has been here before, this is Coffee and Crypto, and I will give a little bit of background on myself and let the others do the same here. So this is me, because Lee is constantly saying that my pictures look like I must be have a drink in my hand. I thought, well, and a Mai Tai. I thought, well, I'm gonna put a new picture up. Maybe I'm having a Mai Tai, maybe I'm not. But this is my background in finance for a long time, and lead two of the graduate programs here in the engineering school at Duke, the Master of Engineering in Financial Technology and the Master of Engineering in Cybersecurity. And with that, I will pass the mantle over to Lee.
Well, thank you, Jimmie, and good afternoon, everyone. It is good to be back on Coffee and Crypto, although it's a little late in the day for coffee. So we'll get back to our normal schedule in the mornings going forward here. But this is my first Coffee and Crypto under my new role, which is Policy Director at the Duke Financial Economics Center. So
congratulations.
Thank you. Super excited about that. I'm going to continue to do, really most of the work that I've been doing, writing about FinTech Law and Policy, Crypto Law and Policy. I'll be teaching some new classes, including to undergraduates, and getting them involved in the wonderful world of financial regulatory policy that I'm so passionate about. I'm still a lecturing fellow at the law school, still teaching crypto law, still going to be speaking truth to power, Jimmie, when it comes to cryptocurrency, standing up to big crypto. But no, super excited. And, this new role is really interdisciplinary, and it gives me kind of free reign to work with folks across campus, including Jimmie and the FinTech program and the Cybersecurity Master's program at the Pratt School of Engineering. So, super excited to continue to work with Jimmie and work more closely with Jimmie going forward, because it's certainly been a fruitful collaboration, and one that I've personally enjoyed.
Absolutely, it's been a lot of fun, and we don't do this very often, but every once in a while we have a phenomenal opportunity to have people on. And I've received a lot of questions about DeFi and crypto and traditional finance. I mean, that's pretty much all of our questions, right? And to me, one of the things that comes up more and more often now is traditional companies that are looking to get into the digital asset space. And so, who better to talk to that than the largest clearinghouse in the world, the Depository Trust Company? So, with that, I want to introduce two people. The first one is Darlene Newman, and I'll let Darlene speak for herself because I can't do that.
Thank you, Lee and Jimmie. Appreciate you inviting us on. This is very exciting for us. I lead internal innovation and research for DTCC. I have a background, a very, very wide-ranging background. I spent a lot of time in startups, so understanding what it takes to get new technology up and running and really get it adopted. As well, I've spent the other half of my career really inside corporations, helping them do digital transformation and innovation. So it's always a bit different when you have regulations that you have to follow, governance, compliance. So it's trying to take that entrepreneurial mindset and really bring it in-house to really show organizations that they need to be up in front and they need to be innovating, because technology is not what it used to be. It moves at a record pace. So I work a lot with our internal stakeholders, looking both at inside out, where we look at gaps and opportunities, and things where emerging technology could support them and help them in improving operational efficiencies, helping improve our client services and products. But we also look at an outside in perspective. What's trending out there that we should be following that will keep us relevant, and how does that fit within? So we work with our internal stakeholders to identify those use cases, what would be the benefit of them, and really choose those use cases that would bring the most value to run POCs and experimentation. We look at not only emerging technology, but we also look at data. In my world, I've been in data my entire career, right? Most innovation comes from data, right? It comes from what you learn from data. So we have two arms of our team where we look at emerging tech and what's trending out there. How can it support us, but also looking at data and what are the actual insights we can get from it that help us improve in ways that we didn't imagine before. So really happy to be on here. I'm enjoying this, a lot. So thank you.
Oh, that's fantastic. No, you're speaking kind of the language, I think, of a lot of people in both the decentralized finance and in traditional finance, but, cutting edge and being able to look at data in different ways, looking at, emerging technologies and the opportunities, not just, kind of the regulatory side of things, but the opportunities that they offer. And also with us today, someone else from the DTCC, who I think will add a lot to this. And he has another person with a long history. Rob, take it away.
Thanks, Jimmie. And I will say I drink coffee at almost any time of the day, and nice. I've had coffee and crypto connected to each other for quite a while, but probably never connected with Duke and Jimmie. So this is new for me as well. So Rob Palatnik, I run the technology research and innovation team at DTCC, which Darlene is a lead member of, one of our leaders. I've been in the financial industry a long time. I started at a FinTech in my first job out of college in 1980. So I was in the financial industry in technology for now over 40 years. I've seen the financial industry move from its traditional model of batch processing and tape and paper certificates to today's high volume, and I'm sure we'll get into that in a conversation. But I will say that DTCC was also a founding member of Hyperledger. We hosted the very first meetup of Hyperledger in late January of 2016, and all the major platforms and technologies such as they existed 7 years ago all came to DTCC's Jersey City offices and met in a room and kind of looked at each other warily. I was chairman of the board of directors of Hyperledger for the past 3 years and recently handed that responsibility off to one of my colleagues. And we continue to believe that the digital model, and in particular, the capabilities that are provided by the distributed ledger technology and blockchain, represent a fundamental change in the capabilities of technology to support digital assets and digital transactions. But we also believe that it needs strong governance, transparency, and accountability. And that, just because you have something called blockchain doesn't mean you also need anarchy as a key ingredient. So I think it's important for, the financial industry. It's important for people who actually have, pension funds and retirement accounts and investments that they are putting into something that's not a scam, that's not a what's the phrase, carpet pull, like that there's somebody looking over the shoulders to make sure that, the industry is proceeding in in a way that is appropriately overseen, and it's not something else.
No, I think that's
Jimmie. I thought blockchain and anarchy went hand in hand. So I'll be curious to hear Rob's thoughts. But we got a handful of students who might not be all that familiar with the role that DTCC plays. So maybe we can have either Rob or Darlene just provide a bit of an overview about really the critical role. I mean, DTCC really is the backbone of our securities markets. So, maybe a little overview would be helpful for folks.
Sure, Leon, why don't I take that? So I'll say, let's start with a really cool number that we have, 2.4 quadrillion. And yes, quadrillion is a number. I've been questioned about that before, but it is a number. After trillion, after billion, after trillion, you get to quadrillion. The 2.4 quadrillion is the dollar value of transactions that we processed last year, and we'll probably exceed that. So who are we? About 50 years ago, if you bought or sold a stock in an equity company like Disney, Ford, IBM, General Electric, you probably got a paper certificate. And some people still have those paper certificates of Disney, one share of Disney hanging in a frame. But that was actually the way you actually had to transact in stocks. And if you had 100 shares and the certificate said 100 shares, but say I wanted to sell 50 of those to Jimmie, I would have to bring them to an organization. That organization would change the paper into that 100 into 250s, and that would be a multi-week process. And then I'd be able to sell the 50 to Jimmie. So the transactions that were occurring through paper involved bicycle messengers, involved a lot of slow processing, and eventually that paper piled up on Wall Street. And in the late 1960s, Wall Street actually had to close one business day a week just to process the pile of paper. So trading could only go on for a few days. DTC, single C, the Depository Trust Company, was formed as a result of the exchanges getting together and say, let's take all these paper certificates, and at least what they thought at that point was digitizing them. Now, apparently, everything that was done more than 10 years ago is called analog. But let's leave that for a separate conversation. They took all the certificates, they created images of them, such as imaging technology existed in the 70s, and they put them on a giant mainframe. And that mainframe and all the certificates were put in a vault, and all of that was in downtown New York City under the aegis of a company called Depository Trust Company. Over the last 50 years, we've worked with the industry to innovate, to modernize, and 50 years ago, there were also many exchanges around the country. There were many clearing organizations and depositories, paper depositories around the country. Now there's basically one, DTCC. We're in a utility. We're owned by the industry. We're governed by the industry. We're supported by transaction fees from the industry. And if we make more than is necessary to run our business, we give that back. And that comes back to the retail public in terms of lower fees. We are the main processing for all equities, fixed income transactions in the United States. We process mutual funds. We process swap transactions globally and provide a number of reporting services to the regulators globally. To a large degree, we provide risk management and governance for the financial industry, making sure that transactions occur and settlement occurs with non-refutable finality. So when DLT came into being, and it provided a new model of non-refutable transactions and transaction finality and data distribution, it was very interesting to us.
So Rob, I have to ask, you guys are clearing for all kinds of different assets. When do digital assets get added? I mean, we're seeing some major financial companies now offering, institutional and retail, not to mention, hedge funds and things like that. But now we're starting to get some big retail players that are, some of the biggest offers of, retirement accounts and things like that. When do we see DTCC step into that space, you think?
Well, I'll say several points to that question. One, the word digital asset is a very strong word, and I think probably the most, one of the biggest things DTCC does is we take the rules and policies that the regulators and the lawmakers create, and we turn them into processing systems that this way the whole financial industry and you, the retail public, don't have to concern yourself with, all right, how many records do I have to keep? How much information do I have to keep? Who do I have to report it to? DTCC does all of that. The word digital asset is an interesting word. And if you have paid any attention to the news lately, you know there have been a number of bills floated in Congress. We actually met, DTCC had a session with Representative Foster from the state of Illinois yesterday to talk about some issues around distributed digital processing and digital identity. So there's a number of bills floating around Congress and the Senate that attempt to define what a digital asset is and under whose remit it should be. Is this something that requires a brand new regulatory body, or does most of existing rule and law apply that governs securities, that governs commodities? Can it be applied equally to these new things that are being defined as digital assets? How much new is it, or is there a body of law that's existed for 50, 100 years, 200 years that can actually apply? Once those regulations and rules are defined, the game will change for a lot of these things that are called digital assets, and there'll be a lot more regulatory clarity. So that's point one. Point two, again, this is more the spoiler alert category. We're going to have a press announcement, I think, next week about something that's gone live inside of DTCC. It's a very small thing, but it's our first live production instance of something that is going to be supporting digital processing.
Okay, wow. Everybody, you got the heads up.
You heard it here first. That's awesome. I mean, so Darlene, Rob,
is there any press on this? My marketing and comp department will kill me.
I don't think you said too much.
There shouldn't be anybody from the press, but these are Twitter fans here, so keep it to yourselves.
Yeah, we operate on the honor system around here, right? Well, that's thanks for that explanation, Rob. So the way I kind of view it from your end is that there's the digital assets, and that term maybe as you alluded to is not as precise as it should be, because at this point all assets are digital in essence, right? But I think we're clearly referring to kind of crypto assets. Well, it's another way to think of it. So one question is, okay, is DTCC clearing any crypto assets or crypto derivatives, crypto swaps? So just kind of what you're seeing on that end. And then I think the second question, and maybe this will be part of a broader conversation, is around tokenization, sort of, putting traditional securities, on the blockchain, on DLT, using DLT for settlement. This is something that you hear a lot about, that, DLT is an improvement over traditional settlement systems, and it can get us to T+0 or real-time settlement. I'm skeptical of all that. I'm frankly skeptical of DLT as providing any genuine economic value outside of private cryptocurrencies. But I just want to kind of get your and Darlene's thoughts on those two issues. Maybe just starting with crypto assets, what you're doing and seeing in that space amongst your members.
Sure. First, I will note, and you've probably, and maybe you've circulated it to your team in defense of your position. There was a letter to Congress from 26 technologists with that skeptical point of view of whether DLT is a true advance, or whether there's too much fear, uncertainty, and doubt around that, and whether there's too many alternative motivations involved in the crypto space. So if you haven't circulated that letter, that is very instructive in terms of the way technologists are speaking up, and that it's good to hear multiple points of view. And I think our perspective has always been reality based. We have to deal with assets as they exist today. And there's no magical switch that turns every asset from the past into digital assets and all things go away and everything new is the only thing that exists. And the reality is, as interesting as assets like Bitcoin are, they don't split, they don't have pay dividends, they don't have corporate actions, they don't behave like normal traditional assets. The reality of assets and the reality of mortgages, where you don't do a deal and pay the fee to buy a house before you have a contract, before you've done an engineering report on the house. You usually don't do the engineering report on the house until you have a contract. So there's the whole set of practices in the business world that are different and kind of opposite of the ethos of crypto, where you have to have the funds in your account in order to make a deal. So that means I have to pre-fund every transaction, which is not the way the financial industry works. It's not the way the world works. People buy what they can't pay for and sell what they don't own. And that's kind of been the practice for many years. What we are seeing and what we believe in is tokenization is a really a good idea and a good thing. The idea that an asset, an individual asset, whether it's at the atomic level like an NFT, or whether it's at the fungible level like a Bitcoin, is the idea of tokenization, where an asset has a representation, but the digital life cycle and the full life cycle of what processing should occur on the asset and what it means when you do a transaction. I transfer that asset from me to Jimmie, for instance, that, where does the dividend go? How is it going to be paid? What does that life cycle actually look like? That all could be in code and taken out of the many manual processes and the many handoffs that occur today. That's brilliant. Okay. And to me, that's the fundamental value proposition. I don't get lost in the nuances of nonces. And, I'll say a lot of the technical details of the different ways the different cryptos were implemented, I think are part of the evolution. Evolution works in interesting ways. And I don't know if anthropology and evolution are part of your classes, Jimmie, but
not too much.
Technology evolves.
We don't go there too many times, Rob.
Well, and you kind of have to look at it too. Like every company that's ever gone out there, the technology is always morphed. Like what they went live with was not what it ended up being. So we're looking at crypto and Bitcoin, and people are buying all this stuff that whether it has value or not is subject to question. But the fundamental technology below it, the DLT allows for efficiencies. Right. And so does crypto morph into assets really becoming handled in a much different way? Do physical assets now become tokenized, and now you can trade and you can own shares of a Picasso? Like, does the DLT platform allow you to do that? So I look at, yes, what came out of crypto came out, but it's not what it's going to be when it's all said and done.
Yeah, I would agree 100%, Darlene. I think that, and we're seeing that, right? We're seeing, companies like Figure and Provenance that are securitizing mortgages, which is something we've been doing for, 75 years, right? We've been collateralizing mortgages, securitizing them, sell them off to institutions as bonds. But they're doing it, and, they've cut out, a significant portion of the costs that both you guys mentioned. Right, they save about 100 basis points in the cost, which is significant in an asset like this. So, in terms of real value and use cases, I always point to that. I think they're doing a really cool job, and I know they're expanding their offerings out there.
Yeah, you're even doing NFTs for your degrees, right? Think about it. You go to a job. I had to prove it was a pain in the backside, right? I actually had a copy of my certificate, and that still wasn't enough. They wanted to call some random person in the school, right? If I had that NFT, the history is there. It's easily transferable. They could see it, they could verify me, and that's the end of it. So I've just made that process of a degree easier down the road for those that need to verify themselves.
And I think that's the real point is that technology moves along an evolutionary curve. Don't get hung up on what exists today and things you're looking at, or you could, Alta Vista my name and find my MySpace page and look at it on your Newton, right? Things are different now than they were 20 years ago. I will say 20 years ago, the idea of someone coming into the financial industry, coming to a company like DTCC or some other company in finance, with it, coming out of your class, coming out of school, and thinking they could change the financial industry, there was a different story 20 years ago. Today, that's the truth. DTCC is looking at literally changing the foundations of the industry and opening it up more, working with the regulators on eliminating friction, democratizing it more, but at the same time, making sure there's governance there. You had what happened with Terra and Luna, and I assume we're going to get into a discussion a little bit about currencies or whatever these things are. The idea that you could have money and that has value one day and is worthless is less than a piece of paper because it's digital. Tomorrow or an hour from now, that doesn't give comfort. And probably in the strictest definition of what a currency is, it really isn't a currency. It's more like a commodity or something else. So, what do these things mean, and what kind of governance is needed, and what kind of background is needed? And to Darlene's point, the NFT things are really interesting, but the conversation we had with Representative Foster yesterday, and some of the work we're starting to do on digital identity is, I think, one of the real keys. You have the model in China where everyone has a digital ID, and then they will know what your investments are. They will know what you bought at the drugstore yesterday. They will know your medical history. In the United States, there are different sets of laws and privacy.
Although I will say that line is blurring significantly, especially with places like the CFPB calling for all the credit card records. Because I think that I hear that come up a lot, but I don't know that that's as valid as it maybe once was. I don't know, Lee, you're the regulator. Yeah. What do you think?
Well, I mean, listen, there's cultural differences for sure. I mean, that, what's going on in China, they don't need the digital yuan to do that. It's already happening now. I mean, there's stories about if you're a Chinese citizen and you go to the pharmacy to buy flu medication right now, for instance, you're getting a text message from your local government saying you need to go here now to take a COVID test. So, it doesn't matter where the data lies right now in China, whether it's at Alipay, WeChat Pay, or the central bank. I mean, it's all being, fed to the Communist Party. And we'll talk about regulation, but I want to make sure I want to learn more about what DTCC is doing and seeing. So I want to make sure we get to
Patrick. We actually have a question about that.
Yeah, can we get to Patrick's question here?
Yeah. Let's do. Hey, Patrick, you want to come off of mute and ask your question, because I thought it was a really good one, and it's obviously very pertinent to what you're doing.
Yeah, thank you very much, Jimmie. And I appreciate the DTCC people here today. And I guess just a little bit of background here, I guess. So with the enactment of Dodd-Frank in 2010, the swaps market came into regulation, and there was a requirement under Dodd-Frank that all swaps be reported, those which are cleared as well as those which are not cleared. And I believe that DTCC's SDR was licensed by the CFTC in 2012, maybe 2013. And I know that lots of CEFs were actually offering Bitcoin swaps starting in 2014. And in fact, actually one of the first enforcement actions by the CFTC involving Bitcoin was with respect to Bitcoin swaps. And so the question is, I'm not talking about your clearinghouses. I'm talking about your swap data repository that collects data and has data reported to it on swaps, as well as, I guess you have also, as of May of 2021, a security-based swap data repository as well that's licensed by the SEC. And I'm just thinking, since digital assets have really been significant in terms of trading volume and value in the last 4 years, there's got to be an awful lot of reporting of Bitcoin, Ether, and other types of digital asset swaps that are going into not only your swap data repository that's overseen by the CFTC, but also I assume you're starting to get some activity in the the security-based swap data repository, which is licensed by the SEC. And I was just wondering if you could give us some background on the volumes you're seeing, what the instruments look like. I mean, it could be a non-deliverable forward, it could be an option, it could be a regular kind of swap related to Bitcoin, Ether, and all these other things. And just what are you seeing? I'm not seeing a whole lot of articles on that, and I would love to hear what you've seen over the last 4 years in terms of, you were talking about data earlier. Well, what's the data on crypto and crypto swaps look like?
So I'll answer that two ways. One, broadly speaking, the different asset classes each have different reporting rules, depending on jurisdiction. So depending on what regulatory regime you're under, the U.S., Europe, Asia Pacific, we operate in regions around the globe for our swap reporting. I am not aware of a crypto asset class, so I'm actually not sure how or if these are mandated from a reporting perspective. But based on your question, I already sent an internal text message to our team saying, do we actually see any of these things? Because I would have thought that conversation would have happened with the regulators previously, certainly in the way you're asking it. To the extent that any of this is formally going on and is formally being tracked in existing swap systems.
And I got a follow-up question to Patrick's, which I think it was a great question, Patrick. Rob and Darlene, you mentioned how one, you're heavily regulated, right? I think you're technically a systemically important financial market utility. This is a Dodd-Frank designation, meaning that if you guys go down, we're all screwed. Is how to interpret that. But of course, your members and your owners, right, are heavily regulated financial institutions as well. I mean, you're talking about the largest, banks in the world, and what are you hearing from them, and how has that changed over time when it comes to cryptocurrency and crypto assets? Because from my vantage point, many large banks were, openly hostile. Of course, I think most people remember what things Jamie Dimon was saying.
Yeah.
Yeah, initially, right? So my sense is that tune has changed a little bit. Now, is the cynic right here. I think it's changed because they just see people making money hand over fist, and they say, well, why shouldn't we get in on the action? But what are you hearing and seeing from your members when it comes to crypto assets?
So 5 years ago, when we started building a trade repository for our credit default swaps on blockchain technology, I sat in a conference. I think it was sponsored by Goldman Sachs for the buy side of the financial industry, and I was sitting next to Greg Schwey, who owns this company called Exoni, which is one of the technology platforms that the financial industry is building on. And we were talking about what we're doing, and it was 2017 or 18, and how we were pushing the innovation edge. And somebody in the audience, when we were taking questions, literally said, "Why are you here? Why are we even looking at this technology? We trust you with our retirement accounts. And this guy runs a hedge fund, and he goes, I make bets over here, but I rely on you. You have to be that pyramid of stability that does not lose anything, does not take risks, does not change." So we were getting those questions 5 or 6 years ago. The story has changed. There was a point probably 3 or 4 years ago, the last run up in Bitcoin pricing, where we got approached by a number of firms that wanted to ask about whether we would entertain doing crypto custody. The ultimate irony from my perspective, where you're taking this distributed, decentralized asset and then printing in your key and your token and your address on a piece of paper and giving it to the ultimate old school depository to stick in our vault, as a piece of paper. So, there was irony there, but now what you're saying about fidelity and what you're saying about, the discussion about, can retirement accounts invest in this? People are taking a stronger look at what these are. I think regulatory certainty is very important for, both being able to put these in your retirement accounts and for DTCC being able to treat these at the same level that we treat everything else. So I do appreciate the distinction. As we're trying to understand how we can digitize the existing model and basically eventually issue digital native assets, but at least have some kind of migration path where if Apple or IBM or Amazon or anybody want to issue a digital stock issuance, it could live alongside their traditional issuance until there's a migration model. But then crypto is a separate category of assets. And as people start investing in those, is there going to be some clarity around that? Even today, it seems like they're being divided into two things. There's the commodity side, where this is, it is a speculative asset that has some value based on some set of utility. And then there are things that are built to offer services. And those seem to be more of the layer two, the things that are built on top of layer one protocols like Ethereum, where you can put a smart contract in place that says, I'm going to do these things. And as a result of that, you will get these services if you buy this thing. And whatever the definition of a security is, that seems to be more applicable. So there seems like the CFTC is going to have a stake in this. The SEC is going to have a stake in this. I'm not clear that there's going to be a new agency and SRO and oversight, but it seems like there'll be some more clarity emerging over the next period of time about what these things are and how they should be considered and overseen.
And I think it was just like a natural progression, right? That they're going to have interest because they're CDBCs. Europe's looking at it. We've got regulators looking at it. They're just realizing the benefits, even though crypto, is kind of a trend. Fundamentally, there's benefits to the technology and the way in which the assets can be transferred and moved around. So I think it's inevitable that people are going to start asking questions, and it's no longer a joke because they're seeing what's happening in the market and how people are using it. So
can we talk a little bit about the utility of DLT? And I want to get Rob and Darlene's thoughts.
Yeah, sure. I think that's wise. Yeah.
Because from my vantage point, right, it seems like blockchain and DLT is essentially worse on every dimension than a traditional database, right? They're slower, right? So we all know, like the Bitcoin blockchain, for instance, they process a transaction like every 10 seconds or something like that, orders of magnitude smaller than what Visa and MasterCard network process. They're difficult to govern, right? Any decentralized system is difficult to govern. The user interfaces are worse. They're more energy intensive. But what people would say that support this is that that's all foundational. Those are trade-offs necessary to accomplish blockchain's main goal, which is decentralization and censorship resistance. Now, when I think of DTCC, I'm thinking of the quintessential centralized intermediary. So there is kind of an irony in my mind, at least, in DTC embracing blockchain and DLT. And so how is it any better, or how do you view it as potentially being better? And if it's DTCC just managing it themselves, then is that even really blockchain? Isn't that just a new form of database? Who are the nodes on the blockchains that you're building?
So first, I'll go back to what things look like today. I don't expect them to look like tomorrow or next year. Every technology seems to go through an evolution, almost like a person. From the COD and database book to the database standard that was from 69 to 86. That's 17 years. So, and if you look at when Java was invented, when the internet rolled out, almost everything seems to have to get into late teens, early 20 years since the idea came out before it actually matures and looks like, the person it's going to be. So, I think we're 12 years into the Bitcoin journey, into this journey.
Since the first block was mined. Yeah, it hasn't been very long.
Yeah. But the other side of that is, let's look at the existing financial industry. There's a lot of jokes that we're a reconciliation business that does a little bit of banking. Every company has a stack that includes a proprietary database, the implementation of a proprietary schema, its own business logic, translations code, so Informatica, data, different vendors selling translation, messaging, MQ, and usually these messaging protocols are dumb. They just take a payload and they move it. I move my payload from DTCC to Bank of America, Citibank to Goldman Sachs to Fidelity. Everyone's just moving their payload. Then they're putting it in their own database format, representing the same exact thing, but in their own database format. Then they send messages back and forth to reconcile between those different formats. Then they apply their business logic and business rules and do their analytics. Then they find out their data changed because pricing's changed, a company split, but they didn't update it. Addresses changed in terms of where a company settles. And the industry is constantly fixing, reconciling, dealing with exceptions because everyone has their own copy of the data. Okay, so at a purely, if this was, the financial industry was starting today and the technologies available were a distributed database or a silo database, I think different choices would be made. I think different choices would be made today because cloud exists. When Satoshi wrote his paper, the cloud was probably, it was more than an inkling. It existed, but not the way it exists today, where companies are sharing S3 buckets on Amazon. So I think there's a shared data aspect where, and mortgages is probably the best example of when, by the time contracts go through lawyers, go through exchanges, go through banks, the security, the loan is issued, it's securitized, and then potentially put into, a mortgage-backed pool. The number of hands different things go through and the number of different data connections that need to be made is the reason for a lot of that cost. And every time you refinance, that comes out of the existing mortgage pool, you got to do another title search. So the idea of getting rid of all that duplication and all that replication is hugely appealing to a company that manages certificates. Okay, so that ultimate who's got the data, I think the NFT market is almost the best example, right? Maybe are you guys familiar with the Secret Raccoon Society? Apparently, they issued an NFT. And people bid on it. The day after the thing dropped, they changed where the URL is pointing. So you thought you bought an NFT with a raccoon with a hat or whatever, and they just changed it because when you buy an NFT, all you're buying is a pointer. Okay, you're not buying the actual thing. Okay, and you've got to trust that whether it's the Filecoin and Protocol Labs or whoever, that this thing is pointing at something that's going to be durable and will last for as long as you're paying for. So somebody's got to own where that data repository is. So what DTCC sees is not the evangelistic, democratization chaos point of view. What we see is that we're in the middle of a data distribution challenge, and data distribution and synchronization and resiliency is a huge technology challenge. No matter what technology people say, that was solved years ago. No, it wasn't. Replicating data, even in the cloud, and making sure when one thing fails, and things fail at scale, we know that, when one thing fails, that the other thing reconciles and has the integrity of data that was transmitted from the first thing is a challenge. And if there's technology that can make that happen with the same business schema, with the same logic, with the same, companies don't have to rebuild all that stuff every single time. We're starting from a brand new level of platform. So that's really part of the value prop we see.
Go ahead, Darlene.
And every technology goes through the challenges that you mentioned, Lee. All of them are slow to begin with. They all have to have governance. So those things can be worked out, right? It just takes time. So I'm with Rob, and it's not the crypto, it's the fundamental foundation of what it does, because yes, if you've ever worked at it, reconciliations are painful, right? A lot of things sit in spreadsheets everywhere, right? So the effort, the manual effort and the time and energy that goes into right now settlement could be more streamlined, right? You could have 24/7 payments. You could have cross-border payments. You could have, atomic settlement where, you're not waiting for end of day settlement, right? You could get it immediately, intraday. So there's just benefits that come from it. Yeah, speed will be worked out. We'll figure out how to govern it, right? We'll figure out how to make it resilient and secure. Those will always come with new challenges, but you get that with all new technology.
And I got one last question for you before we move on to some more kind of in the news items. How do you think about custody? Because it seems like custody on the blockchain is very different than custody in the traditional financial sector, right? So I have a Charles Schwab account. That's where I order stocks. I see, I buy stocks. I see my portfolio there. But at the end of the day, those certificates, those digital certificates, are at DTC in the DTCC's virtual vault. So you're the custodian. But in blockchain, whoever has the private keys is in essence the custodian, right? And we've talked before about not your keys, not your coin, right? So how is that reconcilable, like custody in the blockchain versus custody as it's traditionally been done at DTCC?
I hate to say it this way because this is the way my mother always used to, and she always answered my question with a question. That's a great.
Oh, no.
Okay, this is an active area for us. We agree with that completely. We've been asked by the industry and a variety of our clients to look deeply into this and our board. So we're actively looking at what custody means, what multi-sig looks like, what multi-party computation could look like. How many keys do you need to reconstitute something? We're very conscious, and back to the earlier conversation, and not specifically China, but we've heard in the Estonia digital ID, somebody was able to hack that and look like somebody else from a digital point of view. So, our concern is how do we guarantee privacy, integrity, that whoever owns this, if you Lee have an account at Fidelity or at TD Waterhouse or Robinhood, and you trust them and Robinhood uses us, how do we make sure that there's integrity and oversight and it's irrefutable? So I'll only say this is active. We don't have answers, but we're trying to dive deep into what the right questions should be. And I will say with Darlene and with our relationship with Jimmie and our interns, we may actually be coming back to you guys on some hypotheses that we have, and whether we can prove those hypotheses or fail them and try it out. Because to the points made earlier, we're going to proceed in a way that is the ultimate in caution, but still trying to move forward.
Jimmie, I think that's a future student research project.
It absolutely is. And the DTCC has been phenomenal. I mean, we've done we were doing a couple of projects with them with the FinTech graduate students, and these are very forward-looking projects. These are cutting-edge things. I honestly don't think custody is that big of a deal. I think that places like the DTCC, I mean, even places like some of the big banks, they've been doing custody for 400 years. They know how to do it pretty well. The idea of that, keys, owning your private keys, it's like, okay, so big deal. You do the same thing at a bank account. You put your cash there. Somebody else has control over it. They can do whatever they want with it, right? I mean, it's not a terribly foreign concept. It's just you access the asset in a little bit different way. But could you put it in a depository type account? Of course you can. I mean, I just don't see it being that big of a challenge. But I know we're kind of we're getting up there, and I know we had a couple of other things that you wanted to bring up, Lee. First, I wanted to bring up the and we should do this at the end, but I'm going to do it now. Digital Assets at Duke conference that DTCC will be at, by the way. So all of you now know about it. Digital Assets at Duke is a conference that we will be hosting here very soon. It'll be in January, and so here's the website for it. But you all on here know about it now. We do have rates for students if any of you are students. But this will be a really cool thing. Register for it. As I said, DTCC is one of the companies that will be presenting there. Hopefully several people from there, but we're very appreciative of that. The other thing is, like I say, I know that you had a couple of things that were kind of in the news, Lee, that you wanted to bring up, and I have to, I guess, the tornado is one of them. So go. I'm going to throw that softball.
I do want to come back because one of the business leads in the company actually came back on the question earlier about swaps.
Tell us.
Some of them are being reported, but I can't say how they're being reported. That's I'm saying that. But what I can say is that the Derivatives Service Bureau, DSB, who's responsible for the creation of the UPI, that's the unique product identifier, has created a new work stream to handle reg reporting around digital and crypto derivatives, and they hope to have recommendations out by year end. We're on that committee. So we're part of defining what that reporting regime will look like. What will the UPI look like? What will the data elements look like? So there's actually that was good information for me as well, because I didn't even realize
awesome.
that was as much progress as being made. So,
and before we launch into that, there's one more question that Patrick had that I just want to raise here real quick, because I have a thought on it. There are lots of crypto transactions that are done off-chain. That is, they're not reported to a public distributed ledger. You know, Coinbase, Gemini, FTX all do off-chain transactions. They keep the ownership on internal ledgers, and this seems to undermine the accuracy and completeness of public distributed ledger. How do you address this? So I have to tell you, Patrick, and I'll give you an example here. If you look at some exchanges around the world, and I'm thinking specifically of the BVMF, the Bovespa in Brazil. They list, that's the largest exchange in South America, lists most of the big companies in South America. However, most things listed on the Bovespa trade much heavier in ADRs in the United States. So you look at an oil company on the Bovespa, but you'll see that the volume is actually about 4 or 5 times that in the United States. Why do you think that is? Well, because the Bovespa is clearly transparent. The Bovespa not only is the exchange, but it's also the clearing mechanism, it's the custody mechanism, and they do all, so if you want to do a short sell or anything like that, they know what everybody owns. They keep everything in very separate accounts. The reason that these things, ADRs, trade in the United States is because that's all obfuscated. So if I'm a hedge fund in the United States, I can go use my prime broker at Goldman Sachs. I can use them at Morgan Stanley. I can use them at Merrill Lynch. And oh, by the way, you have no idea that I own all that stuff, right? Because I've obfuscated it through a lot of different clearing firms. Now, at the end of the day, could somebody piece it back together? Only somebody at the DTCC, actually. And even that would be tough because these are prime broker relationships. So, I mean, that already exists. These are on exchange transactions, but you don't know who the owner is, the beneficial owner is of a lot of these things, or it will be very difficult to try to find it out. So we have that, so that's not limited to just, these kinds of assets. We see it in other kinds of assets. Is it problematic? I don't know. I mean, people chase regulatory regimes around the world for all kinds of different things. There's a reason that certain countries exist, and maybe not the only reason, but a primary reason there are a lot of regimes exist is simply for, this type of obfuscation, I would argue. Lee, you're the regulator, you know better than I, but so I don't think it's a foreign concept.
Yeah, I mean, and this gets to Rob's point earlier. I mean, we've talked, over time, Jimmie, all the time about regulation. When you look at a platform like Coinbase, right, as you mentioned, they're fulfilling a number of functions that in traditional financial markets are separated. So 1, they're the broker. 2, they're the exchange. 3, they're the custodian. And then to top it all off, because technically they claim that all they're trading are commodities, they don't have to register with the Securities and Exchange Commission or the CFTC. So they're completely unregulated at the federal level, which just, I mean, that this still remains the case just blows my mind. And so this is something that I think both, crypto, opponents and supporters recognize needs to change. And there's a bill that came out recently in the Senate Ag Committee that would give the Commodity Futures Trading Commission oversight over crypto spot markets and require these exchanges to register and implement consumer protections, which are sorely needed. So, and hopefully there's progress there. I mean, it's not a comprehensive crypto bill. It's not as broad as what the Lummis-Gillibrand bill envisions, but I actually like it because it's more targeted and it addresses like the immediate hole that needs to be plugged when it comes to crypto regulation.
Well, the other cool thing, I think that, and spoiler alert, if at the conference we have the conference I mentioned in January, we have Commissioner Hester Pierce from the SEC and Commissioner Kirsten Johnson from the CFTC. So maybe they'll battle it out in front of us.
That's right. That's right.
I'm excited for that. And Lee's spot on. The conflicts, DTCC comes from the point we were created to address conflicts. And, the conflicts inherent in Coinbase and FTX and some others are interesting. And it'll be, remains to be seen what the regulators want to do about it. Technology
just moves faster than regulations.
Always.
Well, I think that's a perfect segue to Tornado Cash, right, Jimmie? And let me just say, I hope you're not teaching a class on mixers or tumblers in the FinTech.
No tumblers this semester.
Okay, all right. So Tornado Cash is a mixer service. So it's it's a decentralized protocol. Lives on the Ethereum blockchain. It's just open source software. And it allows users to send Ether to the Tornado Cash smart contract, and then it essentially mixes your Ether with other people's Ether and shoots it back to a destination of your choice, and it kind of conceals where it came from. So it's very popular with, as you might imagine, people who want to do bad things, including the state of North Korea. And because of that, the Treasury Department recently sanctioned Tornado Cash, and it sanctioned the actual protocol itself, the software, in addition to a number of crypto addresses that were associated with Tornado Cash and its founders. And this, so this has the crypto sector in a kerfuffle, I will say. But it does raise a lot of novel legal and technical issues, because this is the first time that you've seen the Treasury Department sanction open source software, right? And that is kind of where the argument lies right now, and a lot of people think this is sort of an overreach.
Yeah,
and you've actually seen people, they call this dusting. So what you've seen is for people who are kind of opposed to the government, they are sending small amounts of Ether through Tornado Cash to celebrities like Brian Armstrong, the CEO of Coinbase, and others, and because they received cryptocurrency from what's technically a sanctioned entity, they're violating the law, even though they didn't do anything, right? They took no steps. And so, so it raises a lot of novel legal issues that I'm still sort of working through myself. I mean, I do think it's the right action. At the end of the day, Tornado Cash exists, principally to, fund bad actors, right? And to launder ill-gotten gains. So I think it was a bold move by the Treasury Department. I do support it. But nonetheless, I see that how you actually enforce these sanctions if you're a crypto firm is incredibly hard right now, because what do you do to someone who uses your platform and receives something from Tornado Cash unintentionally, right?
Yeah, I think it's problematic on a couple of fronts. Sanctioning open source software is fraught with issues. I mean, it is so fraught with problems, because that has the propensity for scope creep that is incredible, because they put no guidelines around that, right? You don't want to go there. I mean, open source is how we do a lot of things. Linux, anyone? The other thing about that is, basically shutting down a company. Well, you can't name any bank, any place in the world that doesn't have multiple AML violation fines. I'm not talking about just violations, actual fines. You can't name any major bank, and there are I think I counted 10 so far this year with major SARS violations. There are major brokerage firms and these are not 10 SARS, these are thousands of SARS. So, in the same way, I mean, you might say, well, they're not doing it intentionally, but we know there are countries where banks are that probably are doing this intentionally. That's why people go to those places. They're not easy to get to. They're not easy to function. And so, I think the way that they've done this, shutting down a company, they're cherry picking who they're going after. It's kind of like the insider at the FDIC saying, hey, they are going after banks that are, even thinking about doing stuff with cryptocurrency companies. They are definitely cherry picking and going after these. So I think this double standard, and it is a huge double standard. I'm shutting down this company, but this company over here, well, I'll fine them, which, by the way, when a bank's fined, and you've heard me say this a million times before, it hurts nobody that works at the bank. It hurts no senior executives. That's a fine to shareholders, right? No person is ever held responsible. Never, ever, ever have they been held responsible, right? If you want to hold somebody responsible, if you want to stop AML and SARS problems, put one bank CEO in jail. I guarantee you will stop it. It's never, ever going to happen.
I'm all about that. Let's get Darlene. Let's put them in jail for sure. Lock them up. But let's give Darlene and Rob maybe last word on Tornado Cash.
Last word.
Well, go ahead, Rob. Go ahead, Rob. I was going to say mine was more around the open source. I'm like, you can't always just allow open source to go without any checks and balances either, right? So otherwise you're going to have a ton that could go wrong there. So it's just a fine line of how do you handle that? Because the way Tornado works, it's meant for money laundering. I mean, the person who built it, probably that was what they had in mind, but it's a fine line, right? I'm glad I'm not in the government and have to figure out the regulations and how to handle all this.
I mean, that's a tough problem to solve. There's plenty of open source out there supporting hacking and supporting, other bad actors out there. And, good luck trying to stamp out every whack-a-mole, thing. So, I don't have a lot of view on that. It's just every company.
You guys have to be more careful.
Buyer beware, right? Caveat emptor, but caveat emptor and FOSS. Caveat emptor and FOSS need to be merged into a cool Latin word. So maybe.
There you go. Hey, you know what? Thanks very much for being on and being great sports about it. I really appreciate it. Darlene and Rob, Lee, as always, it's been fantastic. Always fun to do this. So a couple of things. We are going to be doing this on a regular schedule. Lee and I will be publishing out a regular schedule very soon. So you don't have to wonder, is it every 3 weeks or is it every 4 weeks? It's going to be on a much more regular schedule soon. I know. I knew a lot of people would like that. Again, the recording of this, we'll be putting it onto our YouTube channel. Everybody, get out there, take a look at the conference website, register for it, and if you have any questions, you know where to find us.
Thank you very much.
All right, have a good afternoon.
Take care.
Bye-bye.